Isn't it fascinating? The videos that have the least amount of views, that have zero attention, they tend to discuss the assets that perform the best. Now, I've got a theory around this. When an asset is still small, it doesn't tend to have that many investors, and because of that, because it's not that well known, the YouTube algorithm will also not spread out the message that much. Once an asset has already a substantial investor base, then the video becomes very popular, but then unfortunately the growth might have already stopped. And so this is exactly what happened for Zerebro. I made two videos on Zerebro before. The first one underperformed phenomenally, so an average video is here in gray. The first Zerebro video that was published roughly 60 days ago made maybe only half of the views. Another video followed, again a massive underperformer initially, but now the video gets some traction. It might get average views. We could still be early, but let's see how this video performs. And so let me tell you about a video where I talked about a video. At the time of publishing of the first Zerebro video, the price was at 7.7 cents. Now we are at 47 cents, again in the span of around 2 months. And so here's why Zerebro might be worth looking at. Zerebro is part of the Pump.Fun ecosystem, and in the last week, pretty much all Pump.Fun ecosystem tokens went up, except Zerebro. Is this potentially an opportunity to buy the dip? Let's have a look at the on-chain metrics. Let's see who's buying and selling and who's trading the token. Is this the whales that are currently dumping, or is the growth simply by small retail slowing down? Now on-chain, we've got 64,000 holders. Not all of those holders are created equal. Some of them hold just a few cents of the token, others hold hundreds of thousands of dollars worth of the token. And to see what's really going on, I've built a tool to distinguish the number of retail investors versus whale investors. We make this distinction by minimum holding thresholds. On the left, it's 2,000 tokens. In the middle, it's 20,000 tokens. On the right, it's 200,000 tokens. So it's $1,000 minimum holding on the left, $10,000 in the middle, and $100,000 on the right. We can see how small retail continues to accumulate. We see how medium-sized retail stopped accumulating quite a bit since the end of November of last year. And we're seeing a very similar dynamic for the whales. Interestingly enough though, we do have days where the number of new investors is higher than the number of returning investors. And that's actually what we want to see, right? We want to see a growing investor base. The more people are in a token, the higher the price can go. And so on the 30th and 31st of December, there was a lot of new first-time traders. The same is true for the 2nd of January. But most days, there are more recurring traders than first-time traders. Now on the right, we see the number of token transactions per day. That's relatively constant, so that's not negative, that's not positive. But here's the chart I do not like. What we see over here is the trading volume. So on the left, it's in US dollars for every day. On the right, it's normalized to 100% per day, and we segregate by different wallet holder thresholds. So again, we've got small retail, so those are the wallets below $1,000 worth of the token. Medium-sized retail up to 10,000, large retail up to 100,000, and the whales more than 100,000. Now initially, we have seen the whales accumulating the token quite a lot, but now the whales tend to trade less and less of the token. And it seems like small retail tends to take over the trading volume again. Why is that not good? It's not good because the whales on average make better calls compared to small retail, right? Why are the whales whales? The whales are whales because they have traded successfully in the past normally. And so crypto is both a game of luck, but also of skill. And the more the game is played, of course, the more the capital concentrates towards the more skilled people, towards the people that have more information. If the most informed traders, if the best traders tend to touch the asset less now, and it's the small retail guys that do all the trading volume, then is this really the right asset? I don't know, right? I'm simply just interpreting the data, the objective data. What you make out of this data is, of course, your choice. Now, we are currently in an expanding market. There's money flowing in from traditional finance into crypto. We can see this in the stablecoin market cap. I like this chart quite a lot because it has very little volatility, and it shows us very clearly if we are currently contracting and we should be betting on falling prices, or if we are expanding and money is flowing into crypto and we should be betting on rising prices. Since October of 2023, the circulating stable supply has grown by 62%. We are now at $188 billion. When you're sending your hard-earned fiat to Binance, Binance then sends this over to a stablecoin issuer that takes custody of the funds and that then afterwards issues the tokens on the blockchain. And we can see the issuance here in the chart. The thing is though that returns are now very much asymmetric. We can't anymore just buy 100 different altcoins and hope to outperform Bitcoin with that. Have a look at the top performing categories in the last 7 days. It's meme coin related, it's the pump.fun ecosystem, it's AI. So unless your portfolio has nothing but AI and meme coins, you're likely underperforming just plain and simply holding Bitcoin. Here is what didn't perform that well. Privacy coins, real-world asset protocols, bridge tokens, proof of work tokens, lending and borrowing protocols. And why did those tokens perform worse than say the meme coins and the AI agents? It's because of tokenomics. Everybody got burnt after the DeFi summer because of token unlocks, right? Venture capitalists sold all their allocations. And so when we're speculating with a lot of risk anyways, when we buy all of those altcoins and we want to get the upside, why not simply play fairly player versus player? This is, I believe, why AI and why the meme coins are doing that well. Here, have a look at this, right? This is the tokenomics of the balancer token. This is how much the balancer supply increased over time. Within the span of 4 to 5 years, the supply more than 3x'd. And that then means that the token has to underperform Bitcoin and Ethereum. Over here, this is the balance price relative to Ethereum. So not to the US dollar, because when Ethereum and when Bitcoin goes up, then of course Balancer goes up as well, but it's always about relative performance. Do we get more performance by taking on more risk compared to just buying Bitcoin? And for most tokens, unfortunately, the answer is no. We don't see that outperformance, right? Balancer versus ETH did very, very poorly. And that is why people now get into meme coins, etc. Because the supply is not expanding. We do not see an underperformance of literally 99%. What performed the best in the last 7 days? SPX 6900 and Fartcoin. Both are meme coins. SPX 6900 is now at $1.53. Fartcoin is at $1.34. And it's always about being early. Now, how fair is meme coin trading? It's 100% player versus player, but at least it's not venture capitalists or insiders or team versus player. But player versus player in the end still means that the player that has most information and that has most skills tends to make most money. So simply just gambling on altcoins isn't going to cut it. It's about getting the right info. And so have a look at SPX 16900. There are several alerts here, and Kyle Chessy bought the token at 47 cents. Again, now we are more than 3x that value. Or have a look at Fartcoin. Kyle Chessy bought at 4.5 cents. And he's not buying small amounts, right? He's buying 20K over here. Those 4 to 5 cents turned into $1.34. So that's a 25x from here, right? If you make bets like this, it's okay if half of the bets, if even 3/4 of the bets go down. It's really an approach comparable to what the professionals are doing, right? It's buying a lot of small things, but only buying a lot of things where there's a lot of upside. You don't want to buy a lot of large altcoins. You want to buy a lot of small ones, and you want to only buy the things where the insiders have some knowledge. So I've talked about Kyle Chessy now twice in this video. Here is his YouTube channel. He's got 141,000 subscribers. And the reason why we've got these kind of alerts is because we track his wallets. We've got 12 of Kyle Chessy's wallets in total. Have a look at this. This is Crypto Banter. They've got 1.1 million subscribers. And here's the thing with crypto. There isn't a lot of regulation, right? A lot of people simply buy a token and then afterwards promote it on YouTube. And so when a channel with 1.1 million subscribers talks about a token, of course this generates attention. Of course attention leads to purchases, and of course purchases lead to rising prices. And we've got 33 of Crypto Banter's wallets. We know when they are buying and selling. Or check this out. Alex Becker's channel, 1.55 million subscribers, even more. We've got 12 of his wallets. Making money in crypto, I believe, is all about buying with the anticipation that more people will buy afterwards. Now, if influencers buy something and they talk about something, it's likely that there will be a lot of purchases afterwards, right? Depending on how large the token is, of course, and how large the following of the influencer is. If Alex Becker is talking about Bitcoin going up, it's very unlikely that that's going to move the needle. But if Kyle Chessy is buying Fartcoin for 4 cents, then this might move the needle. Now, I like this strategy that much that I made a dedicated tutorial section just on this topic. How can we find influencer wallets? How can we track influencer wallets? And how can we interpret the signals that we get from the tracking? It's all part of the premium membership of this channel. Feel free to check it out. It's thebitcointrader.com. Premium is not just about wallet tracking. It's also about risk mitigation. It's also about on-chain analytics. There's more than 100 tutorial videos in total in premium. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't learn anything, etc., just message me within the first 7 days and I refund you 100%. There's really zero risk for you. Now, does it make sense to buy Zerebro right now? How much more upside potential is there really? We've already seen how the whales tend to not trade the token that actively anymore and how retail tends to buy more. But is there potentially, if the stars align properly, another 10x potentially from here? Let's have a look at market caps. Zerebro is part of the Pump Fund ecosystem. And the growth of Pump Fund has halted in November of last year. We're not growing that quickly anymore. Pump Fund is known as a launchpad for meme coins. Now a lot of attention moves towards AI agents. So for example, towards the virtual protocol on the base chain. But let's have a look at other AI meme coins. We've got Zerebro over here. Again, the only bad performer in the last 7 days with 470 million of market cap. And then let's say we would 2x from here. Have a look at how many other tokens we have to beat just to do a 2x. With a 3x, Zerebro would already be larger than Fartcoin. And AI16Z is the largest of the AI meme coins. Now AI16Z is now also developing another launchpad. So it's not just memes, it's not just parody, but still, Zerebro's market cap is already pretty large. The only hope we can have is manipulation by centralized exchanges. Because here's probably what most whales are playing. Most whales buy up a token in anticipation of a centralized exchange listing. When the centralized exchanges and the market makers buy up a token, then the token goes up. Once we've got the announcement of a centralized exchange listing, then of course the token goes up one more time. Zerebro though is already traded a lot in a centralized manner. Most trading volume happens on Gate.io, followed by Bybit. HTX is part of the party as well. And there's even Binance involved with perpetual futures. And so really the price is now in the hands of the whales. The whales aren't really touching the token right now, but there's a lot of manipulation potentially by the market makers. I do not believe that the organic growth, that the demand by the small retail guy will be enough to do another 2 or 3x in the token. It's all now in the hands of the heavyweights, and I don't really like to trade against the best people in the market. I'm a fan of buying tokens that have organic growth and where the whales are not yet involved. Zerebro, unfortunately, is not such a token. I don't dare to predict where the price is going. Manipulation can go either way, but I don't think it's the best risk to reward to now get into the token. If you got some value out of this video, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.